Hi, everybody. My name is Phil Blancato. I'm CEO and President of Ladenburg Dominant Asset Management, Chief Market Strategist for Jose. Welcome to another weekly Market Impact. Lucky for me today, I have a very special guest with me. You know him already. He's been around. My buddy Fred Boy's on with me today, one of my partners in research. Hey, Fred, how you doing, buddy?
Hey Phil, how you doing today?
I'm doing all right. So here we go, everyone. First off, to some fun stuff. I got to go to a World Cup game this weekend. Personal fun story. I was a translator for the Italian national team back in 1990. Well, started in 94, started in 92. And then for the years after that, I was involved with the team for many years. So actually, personal note, I almost quit finance to go get involved in Major League Soccer when it was taking off in that 94 period right after the World Cup. But then realized my love was the math of finance and economics and decided to stay here. I always wondered where my life would have taken me had I jumped into Major League Soccer. Who knows? Maybe I would have been a GM somewhere or a complete failure. Nothing in between, knowing me, I think for sure. But a good friend of mine from that era is now the coach of Uzbekistan. They didn't have the best World Cup, but I got a chance to fly down to Atlanta and see the game in living color, compare it to the 94 World Cup. And it was, wow, what a stark difference. The marketing and sales of the United States is amazing. I mean, perhaps you've read the numerous articles about how the soccer fans that have come here and going to the states that they don't normally go to, like Kansas City, where the Norwegian fans are and the Netherlands fans are. And they're just blown away by things like Costco and Home Depot and a Buc-ee's. My favorite story was a guy walking into Buc-ee's for the first time. If you don't know what a Buc-ee's is, it's this enormous supermarket style gas station where you walk in and there's everything you could hope to have, from drinks to food to gasoline and showers, and famous for its clean bathrooms, which I'm sure all of us really like. But it's been wild to see the euphoria around the World Cup. And for me personally, as being a big soccer fan, disappointing Italy's not here. It's a long story, and it comes back to economics, that the Italian economics are terrible, and until they figure out that they need to spend money on things like soccer, or if they ever do again, they're not going to have much of a World Cup team. But whether it's the fanfare around it, they started the game with a countdown clock. I've never seen that before. They're like almost as if it was New Year's Eve and the game kicks off and then there's water breaks, marketing, sales, advertising everywhere. Well, the result is, a World Cup that has been very widely embraced. And in fact, I thought I'd start today with a little bit of economics around the World Cup, because it's one thing to see all the euphoria that the Euro Cup that it's brought, and some of the players that we're never going to see again. And if you're a soccer fan, people like Messi and Ronaldo, and the list goes on and on. Neymar are never going to play again. They're just too old. So this is not only the swan song for some of the best players in soccer history, but certainly it's been a cup that has been very warmly embraced. So just to give you an idea, average attendance of games so far is about 65,000. That's a new record. When you look at the number of people attending, that's a new record. When you look at the price per game because of the popularity, well, unfortunately, that's a new record. I'll give you a comparison. When I was a translator way back when, the average price for a game was $58. Today, the average price for a game is $1,000. So you can imagine it's a 1,600% increase in ticket prices. Incredible. But, worldwide audience, billions of people watching, and the demand for it was really quite fascinating. JP Morgan did something fun. They were doing a comparison around it. So far and away, the most expensive thing since that time, 1994, was the ticket prices. Now, you don't buy those every day. In comparison to just standard inflation, and you look at where we are, just standard inflation. Well, hamburgers in that time period from 1994 till now, are up, believe it or not, and they're up a whopping 333%. Go a little further, homes up 213%. But in fairness, wages are up 185%. So wages have, for the most part, kept up. And I'm going to touch on wages a little bit more, a little bit later. You know what's got is up less than wages? A new car, only up 153. Ice cream, 146. Inflation in general up 123. So wages since 1994 have been beating the rate of inflation for a long period of time. Now, we do have this K-shaped economy where the wealthy have gotten much more wealthy. I'd argue that has much more to do with the money that was printed by the federal government going into the hard assets like the stock market and homes. But certainly the chart, what I think was a little bit exciting, that, wages have done fairly well. And even though we have an economy where the wealthiest are more wealthy than ever, as we go through a wealth transfer, as the graying of America happens, and the boomer generations hand off assets to other people, I think that problem fixes itself. But certainly alcohol, by the way, up 100% since then. So, not in the old theme of I'm not keeping up. I would disagree a bit. We do need to find a way. If you look at sentiment, people are upset. They don't think the American dream exists the way it once was. But I would think when you look at the wage number, it's somewhat exciting, and I'm going to get into the other side of that in a second. So my weekend was fun. I got a chance to go down there and see the head coach, as I mentioned, a friend of mine, is Fabio Cannavaro. He was the captain of the Italian national team. The guy who held the big trophy up. They still show him during this World Cup. They have commercials for the World Cup, and he's one of the videos of him holding up the big trophy. It's a lot of fun. They lost the game 3-1 to Congo, and the Congolese fans were really fun. There were much more of them than there were from Uzbekistan. But I think the Cup did something exciting by expanding the format and bringing in so many other little countries. It did make the game even bigger and better than ever before. It is more global than it's ever been. And the reality is, while it was quite expensive to get here and find hotel rooms, watching the international fans appreciate whether it's a big gulp, Chick-fil-A, Buc-ee's, or just the size of our plates of food, which on average are 50% bigger than what you would get in France. I don't know if that's a good thing or a bad thing. We're having an obesity problem in the United States for sure. But all that aside, we have, I think, done a great job putting this cup on, and I'm looking forward to seeing where it goes, even in spite of Italy not in it. And look, the United States, albeit for a tough third match, not their starting rotation, I think it was the good thing that they lost that game. If you follow U.S. soccer, we won the first two handily. We're winning the third one against Turkey, which I guess is how we pronounce it now. I didn't know the name changed, but yeah, the old Turkey. But losing that game, and by the way, the guy I think was offsides on the goal they scored in the 94th minute, my personal opinion. But it's okay. It humbles the players a little bit, reminds them that they're going to work hard for 95 minutes or whatever the number is going to be to win a soccer game and not take it too lightly. That's not a bad thing. A little loss can be, a little humility for them is not a terrible thing. All right, so that's my opening salvo. Fun weekend catching up with some old friends. Fred, what'd you do? You do anything fun this weekend, Fred?
Well, Phil, I have a almost a 2-year-old son. So my weekend was focused a lot on that. We had to go to a toddler birthday party as well. So
Oh,
didn't get to watch too much soccer. But you've been there before, so quite
yes.
quite busy. Quite
The
busy.
Tyler birthday parties were, I gotta be honest, like sticking needles in my eyes. They were not fun. The Chuck E. Cheeses of the world. I'm happy. There were things I loved raising my two daughters, but there's certain things that I'm happy to not have to do anymore. Oh gosh. Quick market update. The markets had a little ebbs and flows this year. We talked about volatility being a normal thing in a normal market environment, even with earnings season being excellent. The market sold off 1.94% last week on the S&P 500. We're up 8% on the year. Solid number. We're halfway through the year. Surprisingly, we just passed, as you know, the longest day of the year, one of my favorite days, and we're finally getting real hot in New York City. We got 100-degree days coming up. But the market's up 8%. So if you do 16 this year, that's a solid number. Better, much better than average. 8 is the average. So nothing wrong with where we're at. I'll ask Fred in a minute. I'm curious his thoughts on the earnings season that just went by. The Dow is beating the S&P. How about that? The Dow up 8.82. It was up last week when the S&P was down. Remember the consequences of being the S&P being so heavily concentrated in tech and at that the Mag 7. The S&P, I would argue, is no longer a diversified index. The top names dominate the index, and the top 10 stocks drive basically a third of all performance of the S&P 500. So when those top 10 don't do well, the S&P is not going to do well. You know what did well last week? Small caps, up a full 1%, up 21% on the year, almost 3 times bigger than the S&P 500. Own small caps? We do, and I hope you do, because we've been talking about small caps for a long time, and it's been doing really well. What's odd? Growth stocks only up 1% on the year, and value stocks up 16. So being diversified has been great, really powerful. And even international stocks, EFA up almost 9% in the year, beating the S&P. What was the surprise last week was emerging markets. We talked a lot about the success of emerging markets. They're still up a whopping 23% on the year. But guess what? Last week they sold off almost 4.5%, and the Nasdaq almost 5%. Why again? Those tech names just getting clobbered. You know what saw a little relief? Finally, the bond market. Now up about 1% on the year. Why? Because oil came down. In spite of the skirmishes that are happening between the United States and Iran, even just today, it sounds like there's a new desire to come to the bargaining table. It just feels like this is going to go on for a while. But I think this trade is open. 70 ships went through on Sunday alone, not the excess of 120. But if you look at the charting of the number of ships that have gone through versus where we're at, we're about half of what normally goes through there. So hopefully that gets rectified, and hopefully there's some agreement in place. It just feels like this kind of skirmish between the two countries might be happening for a while until someone makes a decision on what the final result might be. So good week for markets, not great in that we're good year to date, lost some money last week, but if you were diversified, you did it. And we're, as you know, we believe in diversification. We think it's critical. That you think about America 250. 250 years. We're not just a country of tech stocks. We do a lot of different things here. We're the most diversified economy in the world, the strongest economy in the world. And for that reason, I think it's really exciting to think about if you believe in the idea of don't put all your eggs in one basket, being somewhat prudent, then for sure you're going to do very, very well. So that quick market update, I didn't want to spend a lot of time on it. I would hit on a couple other hot topics. The first one, I have to throw a shout out to a dear friend of mine, or someone I know well, my buddy Carson. I won't give his last name. I made a mistake on the podcast, and I think I've done it twice, not just once, twice. And Carson, and my mistake has been around the discussion around beef. And I used the phrase "never let a crisis go to waste," and I still think it's a very powerful phrase, depending on certain industries that raise prices, like car insurance, home insurance, things that had nothing to do with the pandemic. And beef, to a degree, is something I think is a part of that story. But I need to be very careful how I phrase this. This is not about ranchers, and I did a very poor job of kind of piling it all together. The ranchers have done their best to meet demand in spite of droughts. When I look at the latest drought monitor, it's a bit of an unusual drought monitor right now. If you look at the west coast of the United States, it's almost completely out of the drought, other than a bit in Washington. You look at Texas, almost no drought whatsoever. But you look at the middle of the country, the heartland, where Fred was. I'm curious what Fred thinks about what things are like out in Colorado. It's dry, and we're starting to see some burning there. And we see a little bit of a drought, believe it or not, in Florida, and some on from call it middle New Jersey down to into the Carolinas. Not totally terribly severe, but the bulk of it is the Midwest. And why that is relevant to beef is because not enough grass to have a healthy herd. Hey, Fred, what's it like in Colorado? Have you guys gotten a little bit of rain yet? Or are you still very dry?
Still very much dry here, Phil. We've actually had, a couple reservoirs up in the mountains have been drained, just for water resource needs. And like you said, we've had a few fires come up over the last few days here, not just on Utah. We had some, unfortunately, on the Utah-Colorado border, and then more along the lines of where Vail is as well. There's been a couple up there. So certainly we've with some high winds out here, just dry conditions just creates that really that basically scenario for fires. So it's been
Yeah.
tough, and the Denver area has been in a water restriction need, or area, so we can only, for example, water our lawns twice a week, etc. So there are things going on here. Yeah.
Yeah. So that goes back to my friend Carson and the reality of why ranchers haven't been able to put enough heads into the fields. But it's not about them. It really comes down to the meat processing companies post the pandemic shut down a few large plants, have reduced hours. For example, just last week, there was a settlement done in what was called a consumer price fixing scenario, where the biggest names, call it Tyson Foods and JBS and Smithfield Cargo, all got together and kind of, in a collusive manner, decided to price fix it. And they got sued and they won. You're talking about 200 and almost $90 million, 202 million in a worker wage fixing settlement. That's where they got together to decide upon it, and 87 million in consumer price fixing. So this is not new. And I think when I look at when I made that statement, I was incorrect. And I want to again thank my friend Carson for getting it right. This is not about the folks who are out there raising cattle. It's about the meat packers, and I would argue some degree of manipulation. Even the Biden administration went after them fairly aggressively. Trump recently just settled some of it, but initially went after them pretty aggressively. And the price of beef is up almost double post-pandemic, and that's something that people care a lot about. So, I want to make sure I got that right, and I want to tie it to where we are in the draft. For my thank you to my friend Carson. And then the other headline that's out there, which I think is ties back to my opening statement, is we took a close look at wages recently. And I'm a big fan of the U.S. economy. As you know, you probably heard me talk ad nauseum about how strong our economy is and how we're the best economy in the world. And that's all still true. But one of the underlying tenets is the strength of the labor market. And with low unemployment, it's still very true. But there's something going on right now that has me a bit concerned. And I asked some of the guys on the team. We have actually four very bright interns. One of them, Michael Tona, who did some work for me. And when he looked at wage growth, and basically it has stalled recently, and that's a concern. So if you look at, just to keep it quite simple, and you look at just low wage workers, and where the inflation adjusted wages are, they were for 2025 declined by 0.3%. Or put a different way, middle age and high income all were making more money than the rate of inflation, especially when you factor in bonuses. But when you think about that lower quartile, for the first time in a while, they're now have a scenario where they're making less than the rate of inflation. And we haven't seen that. If you go back to, quite a while back, yeah, well, 8 out of the last 10 years, that hasn't been the case. So a bit concerned about it. And in fact, if you look at the four quartiles of wages, first, second, third, and fourth, the only one that's below the current rate of inflation is that for that fourth quartile, the folks who make the least. So that's a concern. They're basically just slightly under the wage range of inflation. So, for example, if you look at the first quartile, they did 5.6% year over year growth, compared to just 2% for middle-aged households and 1% for lower income households. That's not good enough when inflation's running at 4. So it does create a problem. And for my lack of concern about the health of the U.S. economy, I'd highlight that this is something that we hope gets fixed relatively quickly. Now, in fairness, how I think it gets fixed is that as oil has come back down quite significantly. I know, Fred, if you don't mind, take a look at where oil's at right now. We've seen oil prices come down a bunch, and it should impact inflation. Fred, what do you think of where we're at from inflation and what we would expect, and where's oil at now?
Yeah, Phil, so WTI is trading around $71 today. It was up, slightly just because over the weekend there were developments about the ceasefire being broken in certain days, but it looks like as of last night, looks like the ceasefire is back on track. Now, when you Phil, you brought up wages, and it's pretty interesting that basically for the first time since when we take a look at average hourly earnings year over year, what we've seen the last 2 months here, pretty much since April of 2023, we've seen positive wage growth, exceeding inflation, right? But the last 2 months, we've actually seen negative wage growth, right? So for the first time in basically 3 years, inflation has been outpacing wages. Now, to your point, it's probably not enough to offset, economic growth here in the U.S. And I think to your point also that once oil comes down, inflation is going to start slowly coming down. I think on a year over year basis, it's still going to be the readings are still going to be elevated just because where we were last year was quite lower. So the readings year over year are still going to be somewhat higher. But month over month, I think we're going to start seeing those prices come down. We really haven't seen wages flow through or inflation flow through to wages or other parts of the economy yet. And I think because this was only a 3 month period, we should start to see inflation, drop pretty precipitously over the next few months here.
Yeah, and I think Fred's spot on that because then we get, to his point, better wages versus inflation and cheaper gas prices at a time when people are driving a lot in the summer. Let's hope that happens. Let's hope the ceasefire holds for so many reasons. All right, different topic. One of the things we like to do, we always get we try to do work for you all that's outside the norm, things that you don't think about every single day. And I asked Fred and then one of our other interns, excuse me, Alice Krychek, who's a very bright young man. We get these really talented young interns that come in and just so eager to learn. And hopefully you'll hear about two other ones Allison Hamill and Zoe pretty soon about some work they're going to do. But for today, Alex did some incredible work on Russia, and Fred kind of gave him some guidance. So we have a up. We thought we'd take a minute to talk a little bit about the health of the Russian economy, military, and population. So, Fred, when you think about the work that you and Alex did together, where are the long-term challenges that you think that you think Russia's facing? I mean, there's this kind of boogeyman in the closet that the work you guys did to me exposed the boogeyman for not being much of a boogeyman.
Yeah, Phil, I mean, it's a really interesting question because, you kind of gave us this topic of, well, let's take a look into the Russian economy, their demographics, the military, and see if this, I guess this kind of abstract about Russia, pretty much a spillover from the Cold War, are they really as powerful as they seem? And what we took a look at when we took a look at demographics, economics, the military, is that they are on a much weaker footing. And it's not necessarily just because of what's happened since 2022 with the Ukraine war and some of the losses that they've seen there. But it really comes down to you know demographics. I think primarily, Phil, is the number one headwind for Russia because that only not only affects the economy, it also affects the military, right? When you have a shrinking, aging population, right, that means fewer resources to support the economy, obviously lower tax revenues, et cetera. And that also affects the military pool, right? Because you don't have as many people able to fight, obviously. So I think when it comes to demographics, certainly that's really the number one aspect that stands out to me. But when you take a look at their economy too, I mean, they are still primarily export focused. And it's typically fuel, right? Gas and oil is their main exports. It's more than 50% of the exports. And I think that's okay when you're a developing nation, but they really haven't broadened out their investment in terms of other parts of the economy, whether that's tech or digital services. A lot of dependency has really been on that gas and oil infrastructure and the exports around there, Phil.
So they have a really a one-trick pony in gas and oil. They got military strain and then population decline. So, what surprised you the most about the current position? The population one for me was startling about how bad the population decline is. But when you did the research, what jumped out at you?
Yeah, I think, I had known this before, but I would say demographics is one, but just to vary from you a little bit, Phil. I think the economy, we all, think of Russia as this geopolitical superpower, but when you look at their economy, right, it's roughly basically the size of California and Texas, actually less so. And they really haven't grown their economy over the last decade, roughly. You take a look at what their GDP was back in 2012 to where it is, today, it's roughly the same. And so there is this kind of disconnect between their economy and their geopolitical influence. And, equally surprising, I think, is that, we've mentioned this, about half of their exports come from oil. But also government spending. I mean, the government has certainly been relied on much, much more since 2022. I think about the top, I want to say, five investments or investors in Russia are actually government owned or government semi related. And that's because really foreign direct investment into Russia basically dried up. It started back in 2014 following, the Crimea invasion, and then it just expanded in 2022. So without that foreign direct investment, the economy is much more sensitive to basically the Russian government. Um,
Yeah, and it's funny, you're right, because economically, back to your earlier point, they're really just an oil producing nation. They don't do much besides. They've got some consumer buying, of course, but as a communist country, that's a different ballgame as well. And I was also like taken aback by the military being about half the size of ours, if I'm not mistaken, right? From a military standpoint, they're not nearly as strong, besides nuclear weapons, as I think made out to be.
That's right, Phil. Yeah. So in terms of nuclear weapons, they have their nuclear arsenal. It's slightly higher than the United States, but relatively the same. They do have a pretty sizable standing army, similar to the U.S. and China. But when you take a look at either aircraft, for example, or naval power, it's significantly lower than the US or China. So, just as an example, the US has about, I believe it's about 13 or 14 aircraft carriers. Russia only has one. Russia, their Air Force, they have about, I think, around 3 or 4 thousand aircraft total. United States has about 13,000 total. So when you take a look at the two military sizes, Russia significantly ranks lower than the U.S. and also China to a degree. And now that should be expected because the U.S. spent $750 billion and military and defense spending last year. I think Russia was around 150, 200 billion. So significantly lower. But in terms of percentage of GDP, Russia still spends higher than the US. And I mean, that's to be expected given they are in a significant war right now. But still, their you know, naval aircraft, other military equipment, it's just not as sophisticated, or in terms of resources, they just really just can't, they're just can't stand up to where the US is.
Yeah, I think that you nailed it. It's just, and that's the boogeyman in the closet. It's not much of a boogeyman anymore. So would you still call him a global superpower? Is the influence, or is his influence really not as strong as maybe we think it is?
I think Russia is certainly important from a geopolitical standpoint. I think they are important. They're certainly not an economic superpower. But I think in terms of their influence in certain parts of the world, does exceed, their economy and even to a degree their military, and it's certainly their demographics. And the reason I say that is because they do have certain strategic allies throughout the world. Now, some of those have actually basically come unwound over the last 12 to 18 months. You take a look at Syria, what's happened there. Take a look at
Mhm.
what's going on
Good
in
point.
Iran,
Yeah.
Cuba, Venezuela. So there are parts of the globe that they've really had their influence diminished. But you take a look at them from a UN perspective. They still sit on the Security Council of the UN, I believe. They still have pretty significant cyber capabilities. They still have that influence in parts of the Middle East and Africa and Europe to a smaller degree. And they are still important somewhat in terms of oil exports and natural resources. So they are important, but I really don't think anywhere near in terms of I don't want to say hype, but I think the thought of Russia as this superpower and kind of to be concerned about or scared, I don't think, certainly maybe back in, maybe 2020, I think 2010 in that era, they were certainly more, but right now I think that their influence has diminished.
Yeah, I think that's right. And unfortunately, alcoholism, if I remember from the paper, is very high, and the male average male death rate was at 64, if I'm not mistaken, or was it 54?
I
Very young.
it, yeah, I think it's in the higher to mid 60s, Phil.
Okay.
But when you take a look at their alcoholism rate, as you just mentioned, it's about twice the rate of the U.S. And one other point here, just to talk about demographics is I mean, obviously, in a lot of developed economies, developed nations, we have a declining, population, birth rate, or slower, I should say, not declining. But Russia is actually declining. They've
Hmm.
actually had their slowest birth rate in the last 200 years, as of 2025. And when you take a look at some of the trends there, that just really doesn't seem to be reversing. So we go back to where we started this conversation is what's the number one threat to Russia? Is it the military, the economy? And it just comes down to demographics, right? Because that's ultimately going to affect the economy and the military.
Yeah, that I mean that there you hit on it. I jokingly say the same thing with Italy. No babies, no soccer players. In Russia, no babies, no economy. And that's a common thread. There was a great piece about Germany over the weekend that talked about how Germany for years was this neutral country, produced manufacturing things for the rest of the world. And now China is basically not eating their lunch, has eaten their lunch. That they make the same equipment cheaper and are flooding the European markets with their products. So even a country that has been as strong historically economically as Germany with bad demographics and a kind of a one-trick pony on manufacturing, no technology sector is suffering mightily from it. And then now they have to spend money on defense. So this is a fairly common thread, but I think Russia's probably the best example of how bad things can get when a country's not well managed. And I would argue we're much better managed than the rest of the world. Any final thoughts, Fred? That's good stuff, buddy.
Phil, just to go back to your earlier point about some of the market performance, just to touch on a little bit of that. What's really interesting, you talked about the earnings season, and just to go back to Q1, since we don't have Q2 earnings out right now, Q1 earnings year over year for the S&P were up close to 29% year over year, which is just an incredible number. And you talked about why diversification is important and some of the market performance we've seen over the last 2 weeks here, some of the weakness in tech. One of the best performing sectors through June so far has been healthcare. You take a look at healthcare, they're the best performing sector in June. Financials, also a really strong performer in June. Those two sectors are among the worst performers year to date. And I think it just highlights why diversification within a portfolio is important.
I think you're spot on, right? By the way, Fred just reminded me, I didn't mention PCE. I didn't mention because it wasn't a big deal. PCE came in hot above 4%. And the reason why I didn't mention it because of the falling oil number, I think it's sort of irrelevant to some degree. And that's how the market sloughed it off. It did come in hotter than expected, came in about over 4% for headline and core. So I'm not terribly concerned. In fact, core came in and rose 0.3, 3.4 year over year. We want that number below 3. One headline at 4.1. In the past, you've heard me talk about how PC is the most important indicator to the Federal Reserve. It's the one that they care most about. So as Fred heard on earnings season's a little bit kind of stale now, PC's kind of stale as well, only because that was a period of higher inflation. So even though the number was higher than we want, it's really the next couple of prints are going to tell us whether or not the Fed can cut or hike. Neil Kashkari, one of the Fed governors, came out today and said, we need a hike, not a cut. So we'll see what happens here. I know Kevin Warsh has his heart set on doing the right thing. I'll leave it out there. All right, so that's good. We did good stuff here, Fred. Well, let's wrap us up. Eddie, I have my shout out of the week. I've got two. I should only have one, but I've become using two lately. Anybody want to give a shout out to this week, bud?
Shout out. I will, I guess there's two things. One I would highlight to your point, Phil, about the Fed and some governors coming out talking about a rate hike. I don't know if that's really in the cards for this year. We'll see. The 10-year has fallen back from I think 467 at its highs to I think this morning it's around below 440. So we'll see. I think we get a couple more inflation prints with declining oil that comes down. I think that narrative is going to start changing. But shout out to the week. It's got to be my wife, Phil. She's been taking care of our almost 2-year-old son, who you met a couple months ago.
Wonderful young
And
lady.
she's just awesome and certainly couldn't do without her. So shout out to her.
Fred outkicked his coverage. His wife is beautiful and she's brilliant and smart and very
That's
kind.
true.
So good
True.
job, Fred. Well done. I like that one. My two were fun. First, I'll give it to my buddy Fabio Cannavaro. It's just cool that a guy from Italy becomes a head coach of a country that he doesn't obviously speak the language. He learns English enough to become a head coach, and hopefully that's way to be in the Italian national team coach someday. But for that, they didn't qualify to the next round, but at least he got through. But the other one, I'll give it out to us, America 250. In a few days, we'll celebrate the 4th of July, 250 years old as a country. And I think I'm the shining example personally of what this country means. I am the emblem. I am the kind of the poster child for the American dream. My mom and dad were born in a foreign country. They came here with no money whatsoever, and they made really incredible lives for themselves. My dad, mom and dad probably, I guess their wealth was somewhere between over $4 million. Now, my dad was a blue collar ditch digger, putting in cement, curbing, water lines. Saved his money, invested it smartly, bought homes, and as a kid, we bought a house, two-family home, and we would tear down the walls and redo the pipes and put up new sheetrock, and eventually we'd move in and keep the one that we started in. And then we moved on to another one. When he passed away, mom and dad had three two-family homes, collect rents, had investments in the markets, and they had a pension. I think he's very, very emblematic of what both of them emblematic of what the American dream is. So as we celebrate this 250, I think we remember that we all came from somewhere. We all got here somehow. And it is the power and strength of the American economy that allows us these incredible freedoms. It's our system of capitalism. Just think in 2025, there were more new business started than ever in American history. 2026, we've already passed the amount we did in 2025. So when people tell me the country is struggling or I'm not going to get into socialism, all that stuff. I'm not touching that. I don't believe in any of that stuff. I think it's silly. You're a capitalistic system that has patent rights and bankruptcy laws and commodities, and we have immigrants, and immigrants are the source of our success. So for me, I look around and think, wow, what an amazing place to live. Look at all the foreigners that have come here and just thrilled to be in the United States and enjoying everything that we are. So while my heritage is Italian, I am an American, and my father and uncles and family would always say, the greatest country in the world, the greatest country ever is the United States. And I couldn't disagree with them more. I couldn't agree with them more, excuse me. And for that, happy birthday, America. Happy birthday, 250. And I am like Fred, I'm sure both of us are proud to be American and proud of what it means. I remember as a kid, 50 years ago, I was 8. I remember all the fire hydrants got painted like little Minutemen in the area that I lived in. And then so I didn't see it at this time. I was kind of hoping someone would do it again. But besides painting the fire hydrants look like Minutemen, there's going to be incredible firework displays around the country. I understand they're gonna fire up 4 modular nuclear power plants on the 4th of July. I think that's really cool if it actually
Wow.
happens. There's going to be a tall ships event here in New York City. But for me, I'll take a minute to thank the country for all it gave me and my family, my mom and dad. That's my shout. Long one for the week. Thank you, Fred. Thank you for joining. Thanks for listening, everybody. Have a wonderful, healthy, and happy 4th of July. See you all soon. Bye-bye.